What does he need to do in the next 3 months?
Well, to push ahead and remove the corruption, but specifically to reform the oil sector, right? The NNPC and how they deal with it. It was, it's ironic that Buhari was the one who set it up in the 1970s, and now he might be responsible for dismantling a part of it. So how they go about dismantling some of the state assets, some of the prized assets of the state to improve the fiscal deficit situation in Nigeria, to improve the long-term growth potential, because they need to improve the production of oil as well in Nigeria. But broader picture, look, investors are quite focused on Africa. They are quite willing to invest in Africa. And Nigeria, obviously being the most populous nation in the continent, does have population on its side. But I'm not completely convinced of the idea that demographics is destiny. Right? Nigeria thus far has been a one-trick pony. It really needs to move away from that. Otherwise, it'll face the same fate as Russia did, or is doing right now. Right? Is Nigeria moving towards manufacturing? Is productivity increasing in the country? These are big questions, and I don't think they are being answered right now. So if the oil price rises, it becomes a warrant on just the commodity price. But
you think they're not being answered because it's not on the radar yet, or just because he's been, we've been talking about Boko Haram, he's been distracted with other things?
No, I think there are other issues. I think institutions in Nigeria are still reasonably weak. We have seen a big investment pickup. We've seen a big savings pickup in Nigeria, but that has been entirely due to commodity prices going up. We think institutions are weak. Education hasn't picked up. Look, I mean, if demographics were destiny, if population was all that mattered, then you'd go into Syria, then you'd go into Pakistan and Afghanistan as your top investment bets, because this is where demographics are absolutely great. What you want is places like post-war Germany, post-war Japan, Korea, right, Taiwan in the 1970s, 1980s, where industrial production can pick up, where productivity can pick up. And for that you need strong institutions, for that you need education, and for that you need a strong industrial base. And Nigeria, at the minute at least, remains entirely a commodity trick.
And Gavin, is this what also Nigerian businesses want? We had kind of the international investor perspective, but this is also what people on the ground want.
Yeah, I mean, the diversification, as Bhanu says, is a key priority, but the more immediate concerns for people on the ground are to get the energy going. That businesses have to survive with hours of power cuts, and that's a very expensive business to be in. From the international investor perspective, the liquidity squeeze on the Naira is a huge issue right now. So it means that international investors like BlackRock, Aberdeen, big players in the market, just aren't going anywhere near Naira debt at the moment, because it's very difficult to know whether you can sell the debt.
And actually, Gavin, we're just seeing some live pictures of the inauguration. You can see Secretary Kerry there doing some of the rounds with some of the European presidents. I think I saw also the head of the European Commission. When you look at Nigeria and when you look at what it needs to do, you were, Gavin, in your book mentioning that actually Nigeria comes out as a top pick from investors for the coming decade. So if they get this right, they'll win.
Yeah, I mean, as Bhanu says, demographics isn't everything, but if you look at Nigeria, this is the country that has very special demographics. It's going to overtake America by UN projections in terms of population by 2050. So it would be India, China, Nigeria. Now that gives a huge potential for a consumer-related sector to come up. If the economy can diversify away from oil into minerals, then this is an economy that could follow the example of the BRIC nations.
I'm personally a bit more bullish on the East African story, right? I mean, I think Kenya is doing a very good job. I think Botswana down south, I think Rwanda, Uganda, I think these are the countries that are likely to grow faster, and that's because these are not just commodity plays, right? This is where you can see outsourcing in services and manufacturing coming through. So Nigeria, I feel, even today, is a story similar to Russia in many respects, in that it is largely a commodity story with very different demographics. Of course, Russia's demographics are going down and Nigeria is doing quite well. But again, if you wanted to sell more soap, more cereal, more two-wheelers in Nigeria, I think you'll be quite successful. But if you're looking for the big productivity pickup that will lead an economy from a poor economy to a middle-income economy, you don't have the raw material in place just yet.
Gavin, we're just looking at some of the pictures. They just switched, but we saw a little bit of the pomp with the inauguration. There you go. It's quite grandiose. This is not his style, right? He's more austere. He's more down to business.
Well, that's the reputation that he's got. This is a politician that has made a big stance about fighting corruption, by setting an example, he's not somebody who has these flashy cars and flashy living. You know, he's somebody that is reputed to be down to earth. Now, how much of that is part of his real persona or not is a very difficult question to answer. You know, corruption in the political world is as endemic as anywhere else. Politicians in Nigeria are notoriously among the highest paid in the world. So he's starting at the core, you know, within politics itself, and then he's got to feed out to the NNPC, the National Oil Company. He's got to feed out into institutions which aren't effective, as Bhanu says, partly because of this corruption, partly because, you know, most of the spending is taken up by paying employees, delivering the money that goes to various people rather than delivering the services.
Bhanu, let me also ask you about China, because it's been quite a week. We had the Shanghai Composite yesterday down some 6.5%. What's your take? Do they have a firm handle on this? And is this just readjustment, or are you a little bit nervous?
Look, this has been an entirely momentum-driven market, right? I think the Politburo has been happy with the stock market going up in China because that helps the process of deleveraging. But make no mistakes, monetary conditions in China have been tightening, and the recent policy stimulus in China is basically to counter that, right? So China is going to loosen policy more, but many investors have started thinking, oh, look, China is going to ease monetary policy, ECB is easing, the Fed is still reasonably easy, should that help global assets? China's easing is of a completely different variety to Fed's easing. When China eases, it helps Chinese companies. It does absolutely nothing for the cost of equity for global companies. When the Fed eases, it impacts the cost of equity of every company on the planet because the dollar liability is pervasive, right? The dollar is the currency in which most of these companies issue their debt. What China easing does is hopefully help earnings for companies globally if China begins to rebound from out here. And we do think that for the next 2 quarters things will be okay. But the key issue is this: construction is the main channel through which China impacts the rest of the world, and that is still weak. So I think they're running to stand still. They are easing, but they're going to be able to ease only in as much as they can keep growth at about 6.5% for the near term. In the future, I think it might be lower.